One of the main challenges that López Obrador faces in his plan to secure and flourish the local bank sector is the tension with the central bank over interest rates. López Obrador has been pressuring the Bank of Mexico, or Banxico, to keep interest rates low to support the economy, especially during the pandemic. He has argued that high interest rates discourage investment and growth, and that there are other ways to control inflation, such as increasing production and reducing corruption. However, Banxico has defied him by raising rates to fight inflation, which has reached its highest level in more than 2 decades. Banxico has increased its benchmark rate by 250 basis points since June 2022, from 4% to 6.5%, and is expected to hike it further to 10% by the end of. Banxico has cited rising global commodity prices, supply chain disruptions, currency depreciation, and fiscal risks as the main drivers of inflation. Banxico's rate hikes have been supported by most analysts and investors, who see them as necessary to anchor inflation expectations and preserve the central bank's credibility and autonomy. They have also helped to strengthen the peso, which has appreciated by more than 10% against the dollar since June. A stronger peso reduces the cost of imports and debt payments for Mexico, which relies heavily on foreign financing. However, López Obrador has not given up on his quest to lower interest rates. He has repeatedly criticized Banxico's decisions and urged it to find alternative solutions to inflation. He has also appointed 4 out of 5 board members of Banxico since he took office in 2018, including the governor Victoria Rodriguez, who was a surprise choice after he withdrew his previous nominee Arturo Herrera. Some observers have expressed concerns that López Obrador's appointments could undermine Banxico's independence and lead to more political interference in monetary policy. The conflict between López Obrador and Banxico is likely to continue as long as inflation remains high and growth remains weak. The outcome of this clash will have significant implications for Mexico's economic stability and financial reputation, as well as for López Obrador's ambitious plan to transform the local bank sector. One of the most controversial moves by President López Obrador in his plan to secure and flourish the local bank sector is his interest in buying Citibanamex, one of the largest banks in Mexico, from Citigroup. Citibanamex has been owned by the U.S. financial giant since 2001, when it acquired Banamex for $12.5 billion. Last year, Citigroup announced its intention to sell its Mexican unit as part of a global restructuring strategy. López Obrador, who has a nationalist vision for Mexico's economy, said his administration is considering making an offer for Banamex if a local bid falls through. The main contender to buy the bank is Grupo Mexico, a mining and infrastructure conglomerate controlled by billionaire businessman German Laria. However, there have been rumors that Laria might back out of the deal due to the government's takeover of part of the railroad operated by his subsidiary Ferrosur. The president said he was excited by the possibility of creating a public-private partnership to acquire Banamex. He said the government could purchase a majority stake in the bank and invite the people of Mexico to have shares in it.